Hey guys, welcome back. What a fascinating day we had today in the trading sessions. Well, there's so many stories, so many signals that I could have used to pull together this video. In fact, we had everything from oil prices rising to our incoming Fed chairman making a statement at a press conference that the Fed needs to stay in its own lane. We saw software hitting back today against AI with Adobe and Salesforce making comments to try to strengthen their position in the market. SanDisk traded on the NASDAQ 100 for the first time, and we saw our indexes come down today. The NASDAQ lost its winning streak, the longest one since 1992, but we did keep the S&P 500 over 7,000 again, which was a nice finish for the day. Nice to keep it at that level. But there were three big stories that caught my eye that I wanted to pull together because I think they just tell a greater theme for the market overall. We have known for the last couple of years trading in the AI world is pretty simple. You just bought anything that surrounded or touched the GPU. It was a land grab for raw compute. But today's headlines, the stories that I want to share with you, they mark a fundamental shift in this cycle or this thinking. We aren't just talking about more power anymore. We're talking now about efficiencies, custom silicon, and an unbundling of the AI stack. The era of the monolithic, one-size-fits-all data center may be coming to an end. Today, we have three stories that define this pivot that I want to share with you. The first is Cerebras and the IPO that they filed. This might be the most disruptive IPO that we've seen in a decade in this space. The second story focuses on Google and how they are making a defensive move to break Broadcom's pricing power. And the third final story is SK Hynix. I put it a little on a community post early this morning, but SK Hynix is rewriting the physics of server memory. So this video isn't about one company winning or losing. It's about the entire stack starting to break apart, starting to reorganize and move from a general purpose AI to a precision infrastructure stack moving forward. And if you don't understand where this shift is happening or why it's happening, you're at risk of missing where the returns are going to be in this future in this market. So we're going to dive in and talk about those three big stories. But if you haven't done it yet, hit like, hit subscribe to the channel. You guys know I have a goal to get to 10,000 subscribers by the end of this summer. So if you enjoy the channel, if you learn something from this content, if you like these videos overall, make sure you hit subscribe and join the community so you can continue to get my videos moving forward. But let's jump in. Let's talk about the biggest story, in my opinion, that we saw today. And this is Cerebras IPO. What is it going to mean in the market? What is it going to mean to the other GPU players of Nvidia and AMD ultimately? So this story, guys, is going to dominate the headlines, in my opinion, for at least the next month. Cerebras has officially filed its IPO under the ticker of CBRS, and they're targeting the mid-May timeframe with a valuation likely exceeding $23 billion. Let me just show you some of the headlines that hit today. You can see this actually hit in late Friday. This was in Wall Street Journal. Coming up around Cerebras files for an IPO and as demand surges for more efficient AI chips. You can see the Reuters here had a story of Nvidia rival Cerebras discloses U.S. IPO filings as AI boom drives listings. And what did it do to the Nvidia stock? It definitely saw some pressure initially. So if you look at the first, sorry guys, get rid of these pop-ups. So if you look at the first part of the day, we know that this story started to bubble up around Cerebras' IPO late Friday, bubbled up through the weekend. So there's no question Nvidia had a bit of selling pressure right off the get-go. It's probably some weak hands, some profit taking with a little bit of run that we saw with Nvidia over the last 2 weeks. Some paper hands, probably getting rid of it with fear and anxiety about what Cerebras' IPO potentially could do to the stock. But the beauty of what we saw, and for all of us Nvidia shareholders, is that conviction right here in the afternoon. It closed at about over 201 on Friday, dropped down to 196 here about mid-morning, late morning, and then through the afternoon session was just nothing but straight conviction. It closed at 202.06 today. So it was actually up by up by 0.19 or just about 0.2% on the day. But what a trading session it had overall. But it was really nice to see that level of conviction for Nvidia in the afternoon. So let's talk about what this means, because I think this is the critical part of the story. We know that Cerebras is not a speculative pre-revenue play for their IPO. This company has been driving revenue. They've driven $510 million in revenue last year. It was up 76% year over year. And they had swung their net profit recently to almost $90 million. They are scaling profitably while fighting off massive giants in this space. Their biggest disruptive product is this wafer-scale engine, or this WSE-3. It is a dinner-sized plate monster, let's call it. Nvidia, as you know, they stitch together thousands of small chips. Well, Cerebras' move is to put 4 trillion transistors on a single wafer. And their CEO, Andrew Feldman, isn't just making claims. He is trying to take territory. He has major partnerships in play already. They announced a $10 billion compute deal with OpenAI. And he also has a partnership, an integration deal that he had with Amazon, or Amazon Warehouse Services. So Cerebras is proving that a massive LLM inference, bigger is better when it comes to on-chip memory. Now, with the headlines will be an Nvidia killer. They'll just focus on Nvidia because that gets the click. But we have to look at what the actual risk profile is here for both Nvidia and AMD, because Cerebras creates 2 very different problems for these incumbents. For Nvidia, it's a performance risk. Nvidia's Blackwell, especially their B200, is a masterpiece, but it's hampered by a latency tax. The time it takes to move data between individual chips and the memory, the advanced memory, the HBM. Cerebras keeps everything on one wafer. They are claiming a 21 times faster inference than Blackwell. And if you're a hyperscaler right now running massive inference, Cerebras, they offer significantly lower cost per token. So NVIDIA's risk, what they have at risk is losing the efficiency crown that justifies their high margins in the marketplace. Now, AMD is a completely different story. Theirs is more of a market position risk. So this is the quiet threat that I haven't seen much in the headlines about at all, but AMD has spent a year positioning its Instinct MI 325X as the primary NVIDIA alternative. If Cerebras successfully scales, they become the new high-end alternative. Furthermore, if Cerebras treats the whole wafer as one chip, making their software compiler arguably simpler than AMD's ROCm. AMD is actually an investor in Cerebras, though, through their Series H, which makes it a bit interesting because they've hedged their position. They hedged their bet, knowing that if Cerebras wins, if they come to market and wins, it may actually come at the expense of their own GPU and their own market share in this space. So this is the clear takeaway, the way that I read it. Drop a comment below if you read it differently, but NVIDIA is at risk of losing its performance lead in inference, but AMD is at risk of losing its identity as the only viable option to NVIDIA. If Cerebras becomes this third pillar in the market, a third pillar, I guess, or item in this compute stack, AMD's path to a 20% market share or greater becomes an uphill battle for the company. So this is a massive story overall. This is one I think we have to keep our eye on, and just to see how it evolves. And when Cerebras comes into the market, who do they go after first? Do they try to take position from NVIDIA, AMD? It'll be interesting to see how the hyperscalers play with them as well. But let's move to the second story, which is the Google Marvell flex, kind of them, Google trying to break Broadcom's pricing power. And this is all about the custom silicon war. We talked about Broadcom and why they're so critical to the hyperscalers and how they're moving into this custom piece overall. You know, I put it in my 10,000 portfolio stack, the investment stack that I made, because I'm such a big believer in Broadcom overall. But reports surfaced today that Google is in advanced talk with Marvell to co-develop 2 new AI chips, a specialized memory processing unit and an inference optimized unit overall. Let me show you some of the stories that hit the wire today with regards to this. But you can see, first one saying that Google is playing semiconductor kingmaker and making Marvell a winner overall. We saw this one come out today that Google News sends Marvell stock to a record high. You can see down here below the Marvell jumped to almost 6% today overall. And let's just see what they did. You can see here on the market, opened up with a huge gap up. You can see we're down here. Let me pull that up a little bit. where they closed on Friday. Massive gap up based on this news to start the day. A little bit of pullback, but then strong support through the afternoon session as well. This was a huge story. It had huge impact on Marvell stock today, up 6% almost, like I said. Let's see what it did to Broadcom. You can see a kind of completely different story. Look where Broadcom finished the week last week. Let me take this box out of here. You can see where Broadcom finished the week last week and where they started today, and just the pressure they continue to face all day today. Broadcom was down 1.7% today. Had a little rally at the end of the day, so it's something we'll have to keep our eye on in the market tomorrow. But definitely a tale of two different tapes, and Google making a play overall with this partnership that they announced. So as we know, Broadcom has been the king of the TPUs for almost a decade now. They recently secured a roadmap with Google through 2031. So they still have a strong partnership with Google, as well as Broadcom has strong partnership with other hyperscalers as well. But Google appears now to be looking and trying to play a little bit of chess in this space, because they're not firing Broadcom. They are bringing in Marvell as a third design partner alongside another partner, which is MediaTek, which is MediaTek, out of Taiwan. They're also going to be partnering with them as well. The strategy here is very simple for Google. It's all about leverage. Google wants to squeeze Broadcom's margin. For Marvell, it's clear as well. This is a massive validation of their custom ASIC business, which is projected to grow by 45% this year. The move by Google provides a blueprint as well for the other hyperscalers, whether that's Meta, Microsoft, or Amazon. Broadcom currently holds 60% market share in custom AI ASICs. If Google successfully offloads even 20% of the roadmap to Marvell, I would expect to see that Meta, as well as the others, but particularly Meta, because they're locked in with Broadcom as well through 2029 from a contract. But I would expect to see them demand a similar multi-vendor flexibility the way Google has, the way Google is operating with Broadcom right now. You very well could see the same approach with other hyperscalers. The Broadcom premium that we see in the market is definitely looking like it may be under pressure moving forward, because the hyperscalers are moving. They're shifting from buying at any cost now to optimizing at every layer across the board. We are looking at a future where Broadcom is no longer a monopoly. They're no longer this toll booth, but a competitive vendor in this space. This is a massive tailwind for Marvell and its long-term valuation. The third story that I want to get into is, like I said, I posted this morning, is all around SK Hynix and what are they doing with their space and memory. So finally, this is the bread and butter, as you know, for our memory channel, for this channel, because we focus so much on these memory titans on the Fab 4. But I wanted to dig into this one particularly because of the impact it has on Micron overall. But SK Hynix just announced a mass production of their 192 gigabyte SOCAMM2, their server compressed attached memory module. Let me show you the story that hit the news wires this morning. We can dig in through it, but you can see this morning, this came out about 9, actually came out late last night. Is SK Hynix begins mass production of the memory module for the Nvidia Vera Rubin. And as I highlighted on my post, you can see here that it began mass production for their 192 SOCAMM2, the next generation memory module aimed at AI server functionality while leveraging and using less power overall. And they mentioned that they are they're trying that SOCAMMs are specifically designed for NVIDIA's Vera Rubin, said SK Hynix, and their new product will fundamentally resolve the memory bottlenecks encountered during the training and the inference for large language models. So this was a massive news today overall. And let's think, you got to see, what did it do to the Micron shares? And we saw Micron today, come under pressure, no question about it, throughout the day. But once again, look at a nice support here. Once it got down to about this level of a low of 437, so it broke through that 450 floor, but it rose again, got down again here to the 435 level, but then support stepped back in. And it does feel like that 450 level is this area of support we have to keep our eye on moving forward from Micron. Micron today finished down about 1.5%, but it closed at just over 448, so right in that range. We're going to keep our eye on it in the pre-market, in the after hours in the pre-market to see what it does. But this clearly had an impact on the stock today. This tech that they're bringing, SK Hynix, it uses their 1C NAND nanometer process. And so it's a 6th generation 10 nanometers, and it brings their LPD DDR5X into a removable module format. And it offers, they're saying it offers 75% better power efficiency. It is designed specifically for the Nvidia Vera Rubin platform. SK Hynix hopes that this product solves the memory bottleneck as we move into the agentic AI era. In this space, models are constantly thinking and acting in the background. So there is a huge demand, or there will be a huge demand and need for memory that has massive capacity and near zero latency overall. So this is massive news for SK Hynix, but I wouldn't expect Micron and Samsung to just sit there and do nothing in return. We have to look at what these companies are also doing at the same time. So we see Micron right now, they're shipping samples of their 256 gigabyte SOCAMM 2. So their bet against SK Hynix is that bigger is better. They're moving for more massive context windows that will be required for enterprise AI. They want to be the solution that prevents the memory out errors in the world's largest data centers. And Samsung is looking more for a volume play right now. They are positioning themselves right now as the volume king for Nvidia. They're aiming to capture 50% of the initial supply share for the Rubin platform by early this year. And they're doing that also through aggressive pricing. SK Hynix, as I mentioned in the beginning, they're hitting their massive production now. They're securing themselves and trying to be a first mover and take advantage of that and retain their highest initial margins for this space. So the memory war is no longer about who makes the fastest HBM. We seem to be having a transition now with these three companies. It's about who stays on the Nvidia qualified vendor list while maintaining their double-digit margins at the same time. I would watch the spread between Micron and SK Hynix today and moving forward, because the market is currently debating whether SK Hynix's speed and their 192 gigabyte SOCAMM 2, or will it be Micron's capacity and their 256 gigabyte SOCAMM 2? Which one of those will actually all end up being the winner for the Vera Rubin cycle? So that's something we have to keep our eye on as well. But guys, those are three major stories I wanted to bring to your attention. They caught my eye. I think they were very interesting. You bundle them together and it tells a general theme. So I think the theme of today's session, ironically enough, was unbundling the stack. Google is unbundling itself from chip dependency with their Marvell versus Broadcom, really trying to push on Broadcom's pricing power. SK Hynix is unbundling memory from the motherboard with their SOCAMM 2. And Cerebras, they are unbundling the entire concept of multiple small chips for one giant wafer. We've officially exited the beta phase for the AI trade. The winners in this new precision infrastructure era aren't just going to be the ones that make the most chips. They're going to be the ones that are solving the power and memory bottlenecks. As a mentor, I've always talked about it is the constraints and the bottlenecks that are so important in the market right now. As we open the session moving into tomorrow, I'm going to be keeping my eye on, like as I mentioned, the trading flow, particularly with a focus on Micron. I also want to look at Marvell too, because I want to keep my eye on not only on the flow, but also the RSI for those two products. I think we also have to dig in and look at the institutional footprints and just to see what are the whales, what are the institutions doing right now. So tonight I'm going to be looking at some block trades. I'm going to be looking in the dark pool. I'm going to be looking at high volume prints to see if they give us any indication, if there's a better understanding of what the big money is moving. And are they buying into this efficiency narrative that I mentioned, or are they continuing to stay put and take profits with the old GPU guard that was the simpler trade that we have done for a while? So in my opinion, though, the signals are very clear. The architecture is setting up for a change. And the ultimate question we have to ask ourselves right now is, if the architecture is changing, do we need to change our portfolios to match it as well? Let me know what you guys think in the comments below. I hope you guys have a great night, and I look forward to seeing you soon. Take care.